Bitcoin is holding steady, but is a huge breakout coming? Experts weigh in on Bitcoin's future, from Trump's China talks to BlackRock's big buys. What does it all mean for your crypto portfolio? In the latest video from CryptoRover, Bitcoin is poised for a breakout as it consolidates, with Trump's China talks and Arizona's Bitcoin reserve bill adding to the anticipation. The EU's fourth interest rate cut signals global liquidity expansion, potentially boosting Bitcoin. BlackRock continues accumulating Bitcoin while other ETF issuers sell. The hash rate is exploding, historically a bullish signal for Bitcoin. Comparing Bitcoin to gold reveals similar chart patterns, suggesting potential for a 72% surge. Trump's criticism of EU rate cuts and his mineral deal with Ukraine are mentioned. Global liquidity is hitting new highs, typically correlating with Bitcoin price increases. Funding rates indicate most traders are shorting Bitcoin and altcoins, setting up a potential short squeeze. CryptoRover suggests an accumulation strategy with leverage on Bitcoin and Ethereum, targeting $65,000 as Bitcoin's bottom. He's interested in Ethereum, citing its low valuation against Bitcoin and the dollar, BlackRock and Trump's Ethereum holdings, and a potential short-term price target of $2,500. CryptoRover paints a bullish picture for Bitcoin and Ethereum, citing several macro and on-chain factors. While his optimism is understandable given the historical correlations and current market conditions, caution is warranted. The ongoing trade war and regulatory uncertainty surrounding cryptocurrencies easily disrupt the anticipated growth. Furthermore, relying on personalities like Trump's investment decisions is not a sound investment strategy. While BlackRock's accumulation is a positive sign, other institutional investors are selling, highlighting the mixed sentiment in the market. The potential for a short squeeze and increased liquidity is exciting, but market manipulation and unforeseen events could quickly reverse the trend. Therefore, while the analysis presented is compelling, a cautious and diversified approach is recommended for any investment decisions. In the latest video from Coin Bureau, Guy discusses Circle, the company behind USDC, and its bumpy road to an IPO. Aiming for a $5 billion valuation, Circle filed with the SEC but may delay due to recent market instability caused by new tariffs. Circle's financials, revealed for the first time, show a $1.68 billion revenue in 2024, mostly from managing USDC reserves. However, operating income was only $167 million, with a concerning $98 million paid to Coinbase as part of a revenue-sharing agreement. Despite these challenges, there are potential positives like high interest rates benefiting USDC reserves and growing stablecoin adoption. Circle's acquisition of Hashnode, issuer of USYC, positions them in the growing real-world asset market. The long-term success of Circle's stock depends on factors like the duration of the Coinbase agreement and overall market conditions. Circle's situation presents a fascinating dichotomy. On one hand, their revenue model seems precariously tied to interest rates and a hefty payout to Coinbase. This raises concerns about long-term sustainability, especially considering their net loss in 2022 during the bear market. Recent news articles suggest that the tariff situation is causing wider market uncertainty, making it a risky time for any IPO, let alone one in the volatile crypto space. However, Circle is well-positioned to benefit from the increasing institutional interest in stablecoins and the burgeoning real-world asset market. If they can navigate these initial hurdles and the regulatory landscape stabilizes, Circle could become a significant player in the future of finance. Their success hinges on adapting to market dynamics and demonstrating they can generate profit independently of fluctuating interest rates and external agreements. In the latest video from CryptosRus, Bitcoin holds steady around $84,000 to $85,000 despite the U.S. market closure for Easter. Positive trade talks between the U.S., Mexico, Japan, and China suggest potential relief from ongoing tariff disputes. A U.S. mining company, Artedyne, secured $153 million in funding despite current market challenges. Arizona continues its push for Bitcoin reserves, while over 1,000 Swiss businesses now accept Bitcoin payments. Metrics from Glassnode indicate long-term Bitcoin holders aren't selling, suggesting the bull run isn't over. While the positive trade talks and continued investment in crypto mining are encouraging signs for Bitcoin's long-term prospects, the current market volatility and regulatory uncertainty warrant caution. The fact that long-term holders aren't selling could be interpreted as a sign of confidence, but it's important to remember that market sentiment can shift quickly. It's wise to stay informed about global economic developments and make investment decisions based on your own risk tolerance. In the latest video from Crypto Banter, Alejandro explains why BitTensor, a proof-of-work and proof-of-stake blockchain, offers a good risk-to-reward opportunity in crypto right now due to its recent upgrade to dynamic staking. BitTensor aims to use decentralized computing power to solve real-world problems via subnets. Alejandro believes that staked TAO, the native token, which is currently at 6%, could rise to 20% in the coming months, significantly increasing subnet value. Staking TAO allows holders to choose which subnet they want to support and earn up to 126% APY. Because of this, he argues, the potential downside is protected by the high APY, while the upside potential remains huge. He points to Gradients, a subnet outperforming Google in AWS and machine learning, as an example of the potential of BitTensor subnets. He suggests Omron Subnet 2 and Subnet 55. PreKeyCoinMetrics.io, PreKeyCoinMetrics.ae, as promising under the radar picks. His own biggest holdings are in Jutes, Gradients, and Subnet 19. BitTensor's unique approach to problem-solving with decentralized computing is intriguing. While the high EYs and potential for subnet growth are attractive, the success of BitTensor hinges on the performance of these subnets. Although projects like Gradients are showing promise, the overall market capitalization of staked TAO is still relatively low, suggesting there's risk involved. It's also a complex ecosystem, and the average investor might struggle to fully understand the technicalities. However, if BitTensor manages to attract more users and increase the staked TAO, as Alejandro predicts, the early investors could benefit substantially. It will be crucial to track the performance of the top subnets and the overall growth of staked TAO to assess the long-term viability of this project. It's crucial to remember that this space is still nascent, and the potential for both significant gains and losses is very real.